If you want to take advantage of the investment opportunity, you have to purchase a permanent life insurance. Only they offer customers the chance of a cash value accumulation. Therefore, the premiums are much higher, sometimes 10 times bigger. In addition, there are plenty of fees and charges that you have to pay. Unfortunately, a big part of the premiums goes to cover the fees, for example, administration costs. Let's not forget the commission you owe the person who sold you the policy. If you want to take out a loan from your cash value, you need to pay a cash surrender fee up to 10% alongside an interest rate. Besides the fees, there is uncertain and negative returns. Insurance companies talk customers into buying life policies by promising certain and usually high returns, which many companies promise to be higher than most savings accounts. Even though often policies go with a guaranteed minimum interest, the real return is not as high as that. Why? Well, it's very simple. There are many fees and charges imposed on your account. After they are deducted, the return is far less than the guaranteed interest rate, let alone the promised one. What's more, these promised returns will happen only if you wait for a certain period of time before taking money out, say 20 years. One more thing on the downside is that, especially during the first years of the term, the chances are high that your returns will be negative. This is because often the fees and charges exceed the interest your cash value can generate. Another pitfall is the lack of flexibility of the investment. Unfortunately, life insurance policies do not offer much flexibility. Life is not static. Sometimes the more you predict, the fewer things will happen the way you expect it. Can you predict an unfortunate event? A disease or an accident? No, but you can be ready for this. Having an individual retirement account, IRA, or a 401k gives you the freedom to reduce the amount you pay in case you face financial problems. This will not affect your account, and the money in it will still generate interest over time. However, life insurance does not offer you that. If you miss a payment, the money will be taken out of your cash account, if it's a permanent life insurance. Of course, this will result in the decrease in the cash value. If there is not enough money in your account, or you have spent it on paying premiums, you might lose your policy. Don't you have the right to face financial difficulties and delay a payment or freeze payments for a while? Life insurance will not put up with this if you want your coverage to remain active until the end of the term. Last but not least, life insurance as an investment is not really tax deferred. Some life insurances boast with the facts that they offer tax deferred accounts. To some extent this is true. For example, whole life insurances give you the opportunity to make tax-free withdrawals as well as to grow a tax-free savings account. The first thing is that though the growth of the cash value is exempt from taxes, the premiums you pay are not. Unlike health insurance premiums, life insurance ones are considered personal expenses. The IRS imposes taxes on personal expenses. What is a little tricky is that the withdrawals, for example, are tax-free, but they aren't actual distributions. In fact, to take money out, you have to borrow money from your cash value. You're the lender and the borrower at the same time, but you have to pay the interest rate to your policyholder. So the equation is easy. You don't pay taxes on these amounts of money, but you have to pay an interest rate because you have borrowed the money. Can you imagine the rate to be higher than the possible taxes you have to pay on withdrawals? It's quite possible. Another thing worth mentioning is that if you take out a lot of money, you might exhaust your cash value, which, as you already know, can lapse the policy. That's it for now. On our website you can find more posts and podcasts as well as calculators and other financial tools. I hope you enjoyed it, and don't forget to subscribe to our podcast channel on YouTube. Do you agree with life insurance as an investment? We would love to know your thoughts, so feel free to share them in the comments below.